Good afternoon, and thank you all for joining us today. I am NIN.VC, and I will be your host. I started my professional career at Merrill Lynch with their private client group. At Merrill, we manage portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductor, internet, and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take all these companies public. But that led to another question: how do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. My most recent transaction at Alpha was Circon, a software as a service provider company. The 2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, LPs, and VCs. Fewer IPOs means no exits for VCs, no return for LPs, and as a result, venture funds were on a decline. No new funds means less startup funding, low employment, and slow economic growth. Thus, on April 2, 2012, the Jumpstart Our Business Startup Act, or the JOBS Act, was introduced, which enables crowdfunding for all Americans, and that's how NIN Ventures came into existence. Crowdfunding is the practice of funding a project or venture by raising contributions from a large number of people, typically via the internet. NIN Ventures is the first of its kind technology venture capital fund to be marketed, raised, managed, and reported online. The general solicitation and general advertising under the JOBS Act and Rule 506(c) of the U.S. Securities Act made it possible for us to raise this fund. This rule came into effect September 23, 2013, and we were the first ones to go live with a website and videos about our fund. NIN Ventures also became the first venture capital fund to be seen on a billboard, which was followed by in-taxi ads and other social media facilitated marketing. NIN.VC has been the recipient of numerous awards, and I've also been awarded 2015 CE of the Year Illinois for innovation and contribution to the venture capital and private equity industry, including Private Equity Fund Manager of Year to Watch for 2017 by Corporate America, and most recently we were awarded Technology VC Fund of the Year for 2017. Since 2014, the crowdfunding industry has grown from $16 billion to an estimated $34 billion in 2015 and is doubling or more every year. And according to the World Bank estimates, crowdfunding will have a global market of $96 billion by 2025, which is 1.8 times today's global venture capital industry. Crowdfunding is spread across several types of funding models, including rewards, donations, equity, debt, lending. The two most popular types of crowdfunding methods are reward and equity. For reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business and sometimes in return for gifts or thank you notes. For equity crowdfunding, the backer receives share of a company, usually in exchange of the money pledged. For NIN Ventures on NIN.VC, it will be limited partner interest in the NIN Ventures Technology QP Fund. Crowdfunding is popular across all industry segments, business or entrepreneurial projects, as well as social causes. However, only one-third of crowdfunding campaigns meet their goals. There are a few do's and don'ts to raise a successful crowdfunding campaign. Entrepreneurs must first determine if crowdfunding is suitable for them. If so, which route, reward or equity? Then choose the right crowdfunding platform that fits their needs. Plan ahead of time and create awareness for your product. Communicate with people, investors, press, and build trust and transparency for your company. It is important to have realistic expectations for your plans in terms of dollar raise and time. While crowdfunding is empowering everybody to become VCs, 99% of startup failure rate. How does one identify the winners? At NIN.VC, we start with an entrepreneur. We invest in an entrepreneur because entrepreneurs build companies and not the other way around. Being an entrepreneur is the hardest job in the world, and entrepreneurs face various challenges when it comes to taking their disruptive technologies to market. The few attributes that we look for in an entrepreneur is the ability to dream big, experience and expertise in their industry, ability to communicate with their team and outside, flexibility to adapt to the fast-changing environment, and certain personality traits like being focused, dedicated, disciplined, and working hard to accomplish their goals. As long as the company has certain ingredients like a good management team, a disruptive technology, a viable product, a revenue-generating strategy that form a basic foundation that leads to long-term success. We at NIN.VC like to invest in companies that are going to stand the test of time. The market is flooded with various crowdfunding venture capital options. How is NIN.VC different or better from both entrepreneurs and investors' perspective? There is a major flaw with crowdfunding in general, and that is what NIN.VC is solving. I come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need not more than just financing. They need guidance or domain expertise, help with PR and marketing, recruiting, viable exit strategy, more often followed financing, which crowdfunding portals are not able to support. On the other hand, crowdfunding exposed investors to a whole new asset class which normal population never had the knowledge or expertise to invest in. About 99% of startups fail. On top of that, low minimum investments like $1,000 does not give them a say or a board seat, putting investors at a high degree of risk. At NIN.VC, we solved all those issues. NIN.VC provides diversification. We take a board seat on all our investment and lend the necessary support that an entrepreneur needs to build a business like they would get at a traditional venture capital fund. And the most important part that investors care about is the ability to direct, invest, and enjoy direct returns, which is not the case with a traditional venture capital fund. NIN.VC has the best of both worlds. We are a hybrid between a traditional venture capital fund and a crowdfunding portal. There are various investment options like stocks, bonds, mutual funds, IRA, real estate, and alternatives like venture capital, among others. However, most people are short-sighted and have a three-dimensional portfolio, which only includes stocks, bonds, and money market, versus taking a long-term approach and investing in alternatives like venture capital. Investing in alternatives allows true diversification and also helps mitigate the risk involved in having only a traditional portfolio. For example, Yale. Yale is currently the best performing endowment fund in the United States. Since 2008 to 2015, Yale has increased its asset allocation in private equity and venture capital from 20.2% to 33%, out of which 16.3% is venture capital, compared to 13.7% in 2014 and just 10% the previous year. In general, most people have a three-dimensional portfolio: stocks, bonds, and money markets. But if you look at Harvard and Yale's portfolio, they take the long-term approach and invest in alternatives like venture capital. Historically, if you look at US.VC index and S&P 500, US.VC index tends to outperform S&P 500. And not only that, they have an inverse relationship. This type of investment strategy allows them to achieve true diversification and also help mitigate the risk involved in having only a stock and bond portfolio. Most people are indirectly invested in venture funds via a pension fund or any other investment vehicle. Crowdfunding allows them to directly invest in a fund of their choice by eliminating the middleman, that is the pension fund manager, and their management fee, and allows them to generate higher returns. Now a little bit about the fund. NIN.VC is a $25 million early to growth stage crowdfunding technology venture capital fund. We invest in Series A and B rounds and write checks anywhere from $1 to $5 million. So now the question is, why early stage technology venture capital? If you notice, from 2002 to 2015, technology investments have dominated the venture capital industry. and the highest amount of venture capital funding occurred in early to expansion stage companies. If you notice, from 2000 to 2015, technology-focused funds have outperformed US VC index, and generally, first-time fund managers tend to outperform non-first or other VC funds. So what does NIN.VC invest in? Every sector at some point is up for disruption. Our focus is primarily on 3D printing, fourth industrial revolution, cloud computing, virtual reality, financial services, technology, education software, and other path-breaking sectors, and the new and the next big trends within these sectors. So how can you be a part of NIN.VC? Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allows any U.S. citizen, regardless of income, to make direct investment via a crowdfunding portal. However, investment in funds like ours is still limited to accredited investors. One must be an accredited investor and verify themselves as an accredited investor before they can invest in the NIN Ventures Technology QP Fund. An accredited investor is an individual with an income of more than $200,000 per year, or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary residence. For an entity, any trust with total assets in excess of $5 million qualifies. There are multiple ways to verify if you are an accredited investor. For an individual, it's income, asset, and third-party verification. For an entity, it's asset and third-party verification. There is a wide range of options when it comes to investing in NIN Ventures Technology QP Fund using checking, savings, defined benefits plans, self-directed IRA, and digital currencies. A defined benefit plan is a retirement plan that can invest in a wide range of securities and investment products, including venture funds. Some of the advantages of investing from a defined benefit plan are all contributions made to the plan are subsequently invested at a top and are top-line tax deductible to the business, whether the business structure is a sole proprietorship, LLC, LLP, PC, C Corp, or an S Corp. The investment growth is tax deferred under the umbrella of the defined benefit plan. The contributions will be significantly greater than of the 401k profit sharing plan to help increase the retirement savings account for the business owner. To invest in NIN Ventures using defined benefit plan, you must first sign up on NIN.VC and verify that you are an accredited investor. Next step is to establish a defined benefit plan with Robin Weingart and Associates. Once the plan is established and the contribution is calculated, you can complete the subscription and the payment process on NIN.VC. We also let investors invest in our fund using retirement plans, for example, self-directed IRAs. Self-directed is a descriptive term that is used to describe how some IRA providers administer the assets they hold. With a self-directed IRA, the client controls what their IRA invests in. Self-directed IRA allows investors to hold alternative assets within their tax-deferred retirement plans, such as private placements and venture capital. Like any IRA investment, a self-directed IRA has a built-in tax-deferred growth, and thus an individual will not pay capital gain tax on the growth of the investment. The return will flow back to the self-directed IRA and will not be taxable to the account holder. A self-directed IRA allows for true diversification that is otherwise not achievable in a standard IRA portfolio. To invest in NIN Ventures using self-directed IRA, you must first sign up on NIN.VC, verify you are an accredited investor. Next step is to establish an IRA account with Interest Group or any other provider of your choice. Once the plan is established, you can complete the subscription process on NIN.VC, followed by the payment instructions. We also let people use digital currencies when it comes to investing with NIN.VC. Digital currencies like Bitcoin, Litecoin, Dogecoin are emerging as new form of alternative payments and a global currency. We at NIN.VC understand the significance of this change and allow digital currency owners to attain liquidity via a return for an investment in the NIN Ventures Technology QP Fund. Now let's go through the investment process step by step in detail. The very first step is to visit NIN.VC and sign up. Sign up is simple. First name, last name, email, password, and acknowledge that you are an accredited investor. Once you sign up, you get access to our marketing materials, that is PPM, investor presentation, and other suggested readings. You also get invited to attend our events and calls. You can also schedule a one-on-one meeting with us at our office or online via Skype. Once you decide to make an investment, accept the written disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that is in order, it's only a matter of filling out a subscription document in a W-9 form on NIN.VC. The last step is payment, and it is as simple as selecting the payment method and the amount you wish to invest. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing the other suggested readings on our website before making any investment decisions. Once again, thank you for being on the call. Sign up on NIN.VC to begin your investment process, and feel free to reach us at contact@NIN.VC or 312-953-0930 to schedule a one-on-one meeting or with any other questions and material requests. Have a wonderful day and happy investing.